2023, everybody, and Happy New Year. And let's get started with the Las Vegas market stats for 2023, the January the 3rd. And we're going to go back and look at what happened in 2022. So we have 116 days of inventory, and we're basing that on the number of sales that we had. Hold on just a second. Hold, please. Put these on so that we don't get an echo. All right. So we had 64 sales per day in December, and that's pretty much official at this point. That made our median price 430,000. Now, it went down a little bit, and we predicted that it might go up a little bit, which it did. It's gone up from 428 to 430. And interestingly enough, that's where it started. In the year. Last year, we did 133 sales a day. So we are really behind. However, I think if you look back on statistics, it'll tell you that 2021 was not like a normal year. So we'll call it partial normal, but we had great sales, great appreciation. And this year it's going to be a little different. 2023 is going to be a more solid market, not a lot of jumping around, we don't think. So we shall see what happens. We have about 5,835 single family homes on the market. And of those, 2,127 are $430,000 or under. And that's about 36% of the market. So that's pretty good. So that means more people can buy homes. That's what it should, that's what you should take away from those numbers. The $1 million homes are still selling 4+ a day. That hasn't changed, and that represents about 10% of our market. If you look at the non-owner occupied, still hanging in there, about 29% of the daily sales, and those are people either second homes, they haven't decided yet what they're going to do with that home, or it's a definite investment. So that's kind of like where we are today. Not we haven't really changed much in the past couple months, and I think we're going to see more of the same going forward. The new home sales, I will tell you, are down 60% year over year. And we don't see them jumping to get a lot of building permits, according to Dennis Smith's builder letter. They're kind of going to hold steady and see what happens because, their prices are higher and the interest rates are higher. So they've slowed down drastically. And that interest rate in October was when I went up to 7.08%, that was the highest it was in 2 decades. But it has come down, and now it's about 6.27, which is more palatable, believe me. That's about $300-400 a month difference in the mortgage payment, and then with the lower prices, that helps as well. So I think we're going to go into 2023 with a more solid market. I think we're all going to know what to expect, and buyers and sellers may get their confidence back up there to make decisions now, because when you don't know what's going to happen, you're afraid to decide what to do because, again, you don't know what's going to happen and you don't have a crystal ball. The rents have gone up about 7%, and Dr. Young and if you listened to Brian Buffini last week, they both think the rents are going to continue to maintain that high rent or even go up a little bit. And I think Dr. Young said they may go up another 5% this coming year. We'll see. Again, it's localized. I think our rents have gone down a little bit from what we see in our property management company, our business. And I think that's a good thing. There's supply and demand, and people still are moving here. I think we were at 6,000 per month at one point. We dipped down a little bit to 5,000. We'll see what happens. We'll wait for Applied Analysis to give us their report for the end of the year, which that might not come out for a few more weeks, so we'll sit tight. But anyway, we know that people are still moving here at least 5 to 8 per hour, somewhere in that range. That's still a lot to put it in perspective. Um, Brian Buffini mentioned something that I thought was interesting. Now, I uh, don't necessarily participate in the stock market, but he said he's somebody that he buys stock and then he just holds on to it. He's not a day trader, or he doesn't, visit his portfolio that often to see what he should do. But he did say, that the stocks are probably going to take a hit. They've taken a hit, and they're going to continue probably to be at the level they are now. So if you are in that market to buy stocks, he suggested buying now but holding, because he thinks in 2024, when the market, maybe the interest rates come back down, inflation continues to come back down, it might be a good time to buy stocks. I don't know. Again, that's not my forte, but he did mention that in case you didn't hear him. All right, so I have another chart here I'm going to look at today, and it's interesting to note that if you look at December 2021, go all the way down. I started out at the end of the year to do the calculation. Now, I ran this through the multiple listing service, so this doesn't include new homes. These are resales, and so just single family residential in Clark County, all right, in December, they calculated that the median price of 2021 in December was 430,000. They calculated that in December of 2022 it was 430,000. So if you look back, unless you sold your property in 2022, you probably didn't take advantage of. Look at February at 450, 460, 470, 485. And unless you sold in those months, you didn't enjoy that little surge in the price increase that we had. But at the end of the day, we leveled off. Now, I'm not sure if they're going to take all those numbers and average them out to see what the average increase was for 2022. We shall see what they do. But for the most part, unless you bought last December and sold this December, you probably made a little money on your real estate investment. Um, so that was just interesting that we're like status quo. And I know Jimmy and I were talking, and I don't know which one of us said 425, but one of us said 430, and we'll say we both did, and we were both right. How's that? All righty. So what happened what really went on in 2022 that is noteworthy? We had some, put this down here. Now, we had top 10 deals of the year, and the Review Journal ranks these. And they say some blockbusters that closed in 2022, including the $5.65 billion sale of the Cosmopolitan, uh, which isn't listed because they were announced in 2021, but they were in the this year's top 10 in 2021. I'm sorry. So 5.6 billion sale of the Cosmopolitan that was listed and announced in 2021. I think he's trying to say that it closed in 2022, but it's not listed in the top 10 of this year. Anyway, I don't know why he mentioned that, but I love Eli Siegel. He tries to keep his finger on the pulse of our real estate, and he does an excellent job. So anyway, here we go. Tillman Fertitta. Now, he is a billionaire out of Houston, and he planted his flag on this strip. And yes, he's the father of the Fertittas here in Las Vegas, but he lives in Houston. And he bought 6.2 acres at Las Vegas Boulevard and Harmon Avenue for $270 million. And in October, the commission approved his plans for a 43-story, 2,420 room hotel casino. And work crews have since demolished those buildings. So he is moving forward. He's been approved. He's got the money, and he really, like they say, planted his flag here because he believes that Las Vegas is truly a great place to invest your 270 million, and that's just for the land. I haven't seen the how much money he's going to spend building that terrific property. So, the Frittatas, their corporate empire includes dozens of restaurants and NBA's Houston Rockets and the Golden Nugget casinos in Nevada and other states, and of course the stations casinos. Anyway, that was Tillman Frittata. Number two was land. Now, the company behind Formula One, this was Formula One, it bought 40 acres. This is number two, Formula One land. And it bought 40 acres east of the strip ahead of its high speed race in Las Vegas, which is going to be this year. I know. The parent company, which was Liberty Media, said in May it was buying land at Harmon and Koval for 240 million. And the brokerage firm announced June 1st that the sale had closed. So at the time, the buyer didn't say why it bought the land instead of leasing it, right? I mean, they could have leased the land, but nor did it say what they would do with it when the race wasn't being there. So that to date remains a little bit of a mystery. But it did announce in March it would hold the 50 lap Grand Prix in Las Vegas in November of this year, 2023. And the race is expected to draw huge crowds, and it'll start on that land that they bought. We talked last week about Caesars offering that $5 million package, which is a 3-room, 10,000 square foot facility for 3-bedroom, 10,000 square feet. The balcony holds 75 people. Yeah. So anyway, it's a big deal. It's a big deal. And all the hotel prices are shot off the roof. Supply and demand again. So that should be quite something. Number 3 came in with the MGM Grand in Mandalay Bay. And the casino VC, now VICI Properties announced December it's taking full ownership of the MGM and the Mandalay Bay real estate. VC, which owns 50.1% stake in the properties, is buying the financial giant Blackstone's 49.9% stake for 1.27 billion in cash. No financing there. So it is also assuming Blackstone's nearly 1.5 billion shares of the debt on the resorts. Both properties are leased to casino giant MGM Resorts International. So VC is now going to be the landlord. Interesting. A lot of monopoly going on the strip. Then number 4 comes in with Mark Wahlberg. Now, he bought land in a wealthy Las Vegas enclave, and he's raising the prospects that he's going to build a big house in our casino capital of America. And he purchased 2.5 acres in Summerlin's the Summit Club, and he paid 15.6 million in July for that 2.5 acres. And the next month, he bought a 2-story, 7,327 square foot townhouse in the same community for 14.5 million. So in October, I think it was October, he was on the CBS show, The Talk, and he said that he had moved to Nevada and wanted to build a state-of-the-art studio here, and he wants to make this Hollywood 2.0. Sounds like he's a very serious investor. And I think it was Steve Wynn who years and years ago in a presentation, I think it was The Perspective years ago, and they had Steve Wynn speak. And he predicted that someday Las Vegas would be Hollywood 2.0. And Mark Wahlberg's right behind him. Number 5, Station Land. So Station Casinos bought roughly 126 acres at Las Vegas Boulevard and Cactus. And they paid 172.4 million. And that was mid-year, about in July. And the plot is across the street from the 57-acre spread the casino chain has owned for years and tried to sell. So Not sure what's going on there, but something probably is underlying. The station has extensively bought land throughout Las Vegas. And I think Eli Siegel reported that they want to double their presence in the Las Vegas Valley. We're going to double our population over time, so that only makes sense. Not a bad move. And then you come to Jean, Nevada. So a Reno developer purchased a big property south of Las Vegas with plans to demolish a closed hotel casino and build a sprawling industrial park. Not a bad location if you think about it. Tolis Development bought 142 acres off of I-15 in Jean for 44 million in February. A little bit 11 months or 13 months ago, after it filed plans for a 1.9 million square foot warehouse and distribution complex. Interesting. The shuttered Terribles Hotel Casino occupies a portion of the site. So that, I think it was after COVID, that site never opened again. And the producers of the Battle of the Absolute Dominion, which is an apocalyptic movie, submitted plans to the state to film the movie at the closed hotel. That's just a bit of trivia there. And according to their tax incentive application, the movie had already secured distribution through Netflix. So it's definitely going to happen. So it's called the Battle of Absolute Dominion. And it's a post-apocalyptic movie, excuse me. So that should be interesting. And then number 7, then in the North Strip, the Siegel Group, known for they own Siegel Suites, which are low-priced apartments. They purchased 10 acres near the North Strip for 75 million, and that was last April. So at the time, Steve Siegel said he was eyeing a project that could include a hotel, casino, condo units, and retail. He paid a big sum for the properties, but it was a steep discount from past years. So one of the parcels, which is a 5-acre plot next to the Peppermill restaurant, sold for 180 million alone in the fall of 2007. So he bought the land, 10 acres for 75 million. And one of those, and I guess it's 2 5-acre plots, one of them had sold for 180 million in 2007. And we already, if you weren't in the business in those days, the market was just about ready to crash. It was on its way down. Anyway, number 8. Now here we have Tivoli Village on the screen, and the real estate firm, which is called 3D Investments, they purchased the Tivoli Village, which is, you can see, it's a Mediterranean themed retail and office complex, and it has a lot of restaurants, and it's right at Rampart Boulevard and Alta Drive. And they said 216 million in acquisition costs, and that included this plus 8 acres nearby. Now, I'm not sure where that is. I know that there's some vacant land to the left and some vacant land to the right, so I'm not sure where that 8 acres is, but I'm sure we'll find out. So the same day that it closed the purchase of Tivoli in April, 3D sold a vacant portion of the site to apartment developer for 27 million. So they're going to take some of that vacant portion of that site there, and well, they did. A developer, I don't know this company. It's CALIDA, Kalida Group, for 27 million. They're going to build apartments. I don't know. That's a busy area for traffic. So we'll see. You've got the Rampart Casino, you've got the Suncoast Casino, you've got Tivoli, and you've got a lot of businesses around there. And then, of course, just a little bit south of there is Charleston Boulevard, where you have all those shops in Boca Park. So I don't know, a lot of traffic there. And now, number 9, the Steve Wynn Mansion. British businessman Simon Dolan, who made headlines for challenging the UK government in court over its pandemic lockdowns, he bought the former casino developer Steve Wynn's Las Vegas mansion. Let's see, I think it's 15,000 square feet. It's in the Enclave in Summerlin, and he paid $17.5 million for it. And of course, it's a lavish house and it has a private movie room, crystal staircase, and marble pillars. I think that we featured that one time when it was listed a couple months ago. So Steve Wynn, he's pretty much out of here. He's living in Florida. Um, Chinatown Plaza, that was number 10. So there's a strip mall that started Las Vegas Chinatown Commercial District right along Spring Mountain. It changed hands. Southern California investor George Lin, LIN, acquired the 1990s era retail center for 38 million in June. Chinatown Plaza has restaurants and cafes and grocery store. I think it's the 99 ranch markets there and several other businesses. And it also has cultural events, and it has I think it has the annual Chinese Year celebrations there. And so those are the top 10. We go from the big frittata deal, which was 270 million, all the way down to number 10, which was which was 38 million. So from 270 million down to 38 million. And actually, Steve Wynn's property was 17. So that's down to 17 million. A lot of big money in our town. So people keep moving here, people keep investing here, and it's because they see the potential. And what a beautiful place we live in. Great weather. We don't have all that bad weather. Now we have a football team, a stadium, we have a hockey team and T-Mobile. So we have the Aviators. So we have a lot of things going on in Las Vegas. We have a few more minutes today, and I just want to talk a little bit about, let's see, I want to talk a little bit about, I think it's time that you audit your social media platforms for the year. Didn't get a chance to talk about this at the end of the year, but I will talk about it now. And one of the things that you need to check for is any broken links that you may have in your profiles on LinkedIn or Facebook, or YouTube, uh, Instagram. Broken links happen, and because you're not the one clicking on them, usually you don't know they're broken. But I would take a little audit of all my platforms that I'm on, and I would see if there's any broken links and fix those. Then, and then let's see, when was the last time you posted to that platform? That's another one, right? So if you haven't changed your picture on LinkedIn, your profile picture, I would suggest that you do that. And then the same with your profile picture on your Facebook. I did mine the other day. Mine had 2022 on it, and I changed that to 2023. And then Instagram, have you changed do you have Linktree, or do you have your bio that has one link in it? And does that work? Have you considered going to Linktree? And so that when they click on that, they can see several links and see your website. They can go to landing pages. They can go to a YouTube channel. So you can put, I forget how many I have. I think I have 10 or 12 different places, and you can put icons there. You can make it look pretty jazzy. And just another gateway to information about you or information that you provide to people. Anyway, that's a good thing to do. Uh, if you have a business page on Facebook too, you should definitely change the picture. You get the algorithms do give you some merits when you do that. So, and it does notify, depending on the platform, it will notify people that you have changed your profile picture. And then what about your about page? That's another thing you probably need to look at and refresh, update perhaps. Give it some of these Las Vegas statistics. That you can say you live in a town where this happens, or Great Las Vegas, it's going to become Hollywood number 2. Just some interesting tidbits so people read about you. So I think that's a very good thing to do. And then, do you have contact info on all your sites so that people can find you by email, by phone, and or your website? So you need to make sure that you have all your contact information. It's all updated on all of your sites. And then when was the last time you updated your profile photo or cover photo, which I talked about earlier. So I already had talked about that. Um, and you know, I my one of my questions was, when was the last time you posted on that platform? So update your cover photo, update your profile photo, and also post some articles. If you belong to the group, you can go and get the Las Vegas stats. We put the different things up there all the time that you can go and add to your articles on these different sites. I do that for you. That makes you relevant and makes people see you, and you wanna be the realtor that people see everywhere. "Oh, I see you on LinkedIn. Oh, I see you on Instagram. I see you on Facebook." Anyway, very important. And, one of the things that isn't on here is your Google business page, which, Jimmy has Jimmy's after me and Kane to do another presentation to help people build their business Google business pages. And I think what we're going to do this month is combine the LinkedIn, setting up your LinkedIn properly along with your Google business page, because those are the two foundations. When people search for you, that's what they're looking. They're going to find you on LinkedIn or your Google business page. And you want to make sure that you are up to date on both of those sites. Google business page is very important. And 46% of all the searches are localized, meaning people are looking for realtors in Las Vegas, or the best realtor in Las Vegas, or the best realtor in Summerlin. And there's many different ways that you can put your keywords into your profile and things like that. So anyway, that's a whole class. That's about an hour of learning how to do what to do and when to do it, how often to do it, so that you don't become a spammer in their eyes. So anyway, lots of little nuances that you need to know, and that's why Jimmy wants us to do a class on it. So we're going to do it anyway. So what platforms should you focus on? Well, Google, your business page, and LinkedIn. And if you're not sure, you need to see who your clients are. Like, look at 2022, and did you sell homes to a particular uh, age group? Were they seniors? Were they soon to be baby boomers? Were they people moving out of their two-story homes into single-story homes? Were they people moving out of condos because they were going to get a family and go into a house? So we're kind of go back and see if you have a following of some kind or a niche of some kind, and then what you can do is you can get some testimonials from those people, and then more people in that particular niche will follow you. And then then from there you can decide, okay, Instagrammers, this is a certain age group that go there. Facebook, certain age group that go there. And then, of course, LinkedIn, if you're getting a lot of referrals or a lot of different business people. So it's a good idea for you to determine where you've been getting your business, or who do you like to work with, and then go after that particular niche or group of people. um, yeah, so where do you enjoy spending your time? And maybe that's where you need to focus on getting information about local restaurants where you like to spend your time. If you're a hockey fan, if you're a football fan, whatever it is that you like, if you have a particular type of dog, I mean, people that have that type of dog, oh, it's an instant bond. So anyway, some of the things that you should look at um, for this coming year. And when you're working through your social media strategy, and by the strategy I mean the type of people you want to focus on, it's important to note that regardless of the platform, there's original content from you in your voice with your opinion is truly the best type of content to speak. And that's why, if you've ever outsourced your content or signed up for some sort of automatic posting, most likely you've had very little engagement or results. Now, I know with Agent Formula, we post things from your website, and your website is always, like, every day there's a blog on your website that we post. So those are types of things that you can automate or do yourself. And keep relevant because it's Las Vegas content, that's on your site. And then there's real estate content, there's mortgage content, there's all types of things that surround what you do. Anyway, that's an important thing to consider with your strategy. And if you can just, I mean, I hope everybody's doing videos by now. And then you can put those on your website. You can put those on your Facebook business page, put those in your LinkedIn. And hopefully you have a YouTube channel by now. Anyway, those are things that you need to consider. And you can just brainstorm a little bit here and see, start writing things down. Like I said earlier, who do you like to work with? Or who do you not love to work with? And what do you love to do? And what's the most important thing for you professionally or personally? These are the types of things that you need to be threading through your posts and articles on your different platforms. Um, and then you know what? A lot of people want to know, why did you get into real estate? And I know that's in my experience, most agents have the same answer. They love people, they love houses, and they love to serve people. They love working with people, and selling them or selling their biggest investment that they've made. So those are some of the pretty much the standard answers. But if you have a different reason why you got into real estate, you might want to add that to your repertoire of videos. The other thing is, and I know Sue Benson, Pinky from Naples, Pinky Knows Naples, she used to take every seller and ask them what they loved about the house they bought. And she would make a video about that. And I thought that was very clever. So that's something maybe you can do as well. Because people buy houses for different reasons. Oh, we decided to have a family. And so then maybe you show them you do in your video. And a lot of people, will niche the place or mark the place as their children grow, how much they grew. And one lady that Pinky interviewed, she says, I bought this house because I love the dressing table because I have so much makeup. And of course, that was cute. And Pinky put that in her video. And it attracted a lot of attention. And it attracted a lot of people that, gee, um, why did I buy my house? And they thought of Pinky when they would think of that. Anyway, lots of things to do. Running out of time. I'm a little bit over time here by 3 minutes, so I'm going to say goodbye. I will see you Friday morning. We will continue to work with what we're going to do for 2023 and how we're going to attack this solid year that's in front of us. You all have a wonderful day. I love you. Oh, wait. I forgot something. What else is new, right? Forgot. Where's Jimmy? Jimmy. We're having a class on Friday, and Jimmy's going to teach ethics. And I guess I don't have his, yes, ethics, and I don't have it. The class is going to be Show Me the Money, and it's about your commission. And it's about the procuring cause. It's a great class, 10-to-1. Go to bee.vegas, sign up for it. And I will see you Friday morning. If not here, I hope to see you in class. Have a wonderful couple days and Happy New Year.